In today's video, I'm going to teach you how to set up Thinkorswim Scanner for day trading. We'll keep this simple and practical, so you can quickly surface liquid, tradable names each morning. Everything we'll do is inside the desktop version of Thinkorswim. The goal is to take the overwhelming list of tickers in the market and narrow it down to a focused set that fits a day trader's needs. Start by heading to the Scan tab along the top of the platform. This opens the scanning workspace. Make sure you're on Stock Hacker, which is the stock-focused scanner in Thinkorswim. If you see a different label like Option Hacker, switch it back to Stock Hacker. This tool lets you filter thousands of symbols at once based on rules you define. So instead of scrolling watch lists for hours, you'll have a targeted list generated in seconds. As you work here, keep an eye on the results area at the bottom. This is where matching symbols will appear once your criteria are in place. Next, decide what universe you want to scan. At the top, find the drop-down labeled Scan In. Choose the scope that best fits your workflow. All Stocks scans the entire market and is great when you want broad discovery. If you prefer to stay within names you already follow, switch it to your personal watch list, so the scanner only looks there. You can also pick predefined universes like optionable stocks or restrict to a major exchange such as NASDAQ or NYSE. This choice simply limits where the scanner looks, which speeds things up and keeps the output relevant to your style. A tighter universe is helpful if you already know the types of names you like to trade. Now add a couple of core filters that day traders rely on. Click the Add Filter button and select Stock Filters. Start with a price filter by choosing Last, then set it to greater than $5. This helps you avoid ultra-low priced tickers that often have wider spreads and less reliable liquidity. Next, add a volume filter by selecting AVG volume, the 30-day average, and set it to greater than 300,000 shares. Using the 30-day average helps ensure there's a consistent baseline of activity rather than a one-off spike. You can always tighten or loosen these thresholds to match your risk tolerance and fill requirements. With those filters in place, your results will populate with stocks that are generally more liquid and better suited to quick entries and exits. From here, you can refine values as you learn what produces the cleanest setups for you. Keep it simple at first, focus on quality over quantity, and revisit these inputs periodically as markets change.